Hey, good evening, everybody. Let's dive into some recap from the session today. It's not really too exciting of a session. I would say, obviously, memory was pretty exciting. There's a couple good trades, and ASTS as well. Actually, needed to add this here, which we'll talk about. As far as the overall market is concerned, it gapped up, so a bit of a gap and go into 75.39. This was an interesting setup. So while we're on it, I did see a couple trades here. The gamma didn't, make me like this long quite as much. We had some pretty stacked positioning that made me a little bit reluctant on the long side. But I will say, just technically, back to after we pushed through. So, okay, just taking a step back here. The 75, 18, 17 area was the previous all time high. So we opened up and tagged that, rejected it, and then tested it again, only to reject, and then broke through. So it's just a game of odds, right? If you test a key spot like that more than once, the more times you test it, the more likely you're going to see price accelerate once it gets through, which is what you got. Then we got this pullback again, this positioning when we go down. Look at the GEX here. Was pretty stacked on the sell side, and that can lead to more velocity if the buyers do step through. But given the suppressive landscape, um, I was a little bit more reluctant to favor longs. And then we did get enough push on that back test through out to get through that 30 positioning before it eventually turned. So this was one of those things where I think the gap and go and trend day was attractive enough for enough people to push price through, which is what happened. Then when we turn, I did call this out as a short. Would have been a trade I would have been happy to have alerted because of this 30 spot. So we had the stack selling below us. We have suppressive charm environment. The 30 was pretty big at the time. So I have this around just after the time I had mentioned that. I think it was even slightly larger. And there was really not a whole lot going on below it until 7,500. So this is a good example of where, you have the GEX lining up, you have this oppressive environment and a clear shot to 7,500 with no real big positioning. At the time, it was about 7,490 and 7,500 had some positioning. And look at what happened. We sold direct into that and then just kind of hovered around it and closed up closer to the polar. So this is just, another example of the edge that is in the being able to see the data, right? So that being said, it's this long section, wouldn't have necessarily anticipated. And there's a good lesson in there. The lesson being just because you have a landscape and a setup or roadmap doesn't mean that there's a signal, right? So this is that whole, I've talked to everybody a lot about this, and something that really transformed my trading was going away from just, okay, you have a thesis and put on risk. You have a thesis and then you wait for a signal and then put on risk. Making that connection and adding that step into your trading may sound very simple, but a lot of traders don't do it. And it can really help your performance and bottom line. This is an example of that. Technically, there was enough people to push price through here and get through a lot of that gamma that we had, and it acted a little bit more as an accelerant of sorts in the short term after the open. So if you're going short, you're starting to get squeezed out or pretty nervous if you're trying to short against the 75.18. There's no real signal here. A signal could have been a break under this opening low, right? Then that would have been a signal. But then we got this after we finally stalled and then broke through 30, which is lines up with the positioning here. Once we got under that, that's a signal, and also technically it's a signal too, right? You have a turn, right? So you have the structure higher, trending higher, then boom, it breaks the structure, and then you have a pocket to 7,500. You're risking this bar. So this is a trade where you can actually, because if we hold 30 or get back above it, it's pretty thin above as well. We probably go to 50. So you can just use a simple stop that's very close using this bar to just ride the momentum into 7,500. And that's exactly what played out. So I thought that was a good one. A couple lessons within it. All right, so I took SNDK today. MU was, let's just talk about MU first, because this is like an example of sometimes I've seen this a couple times where if there's enough strength in a stock or momentum and volume, you can get these, regardless of the extension, these just big moves at the open. And that doesn't mean you have to trade them all, but it is an observation I've noticed that does happen from time to time. The RSI just doesn't even matter. Um, and I think it's something that we can, maybe define a little bit more. I think the context with this one that's pretty straightforward is all-time highs. So all-time high break, there's just enough buyers once price was held above it to just go and not look back, right? So maybe a little easier to say in hindsight, but it is a simple idea. You have trending structure. Yeah, we're a bit extended for sure. So you want to basically think about it like this: if it's extended and the setup is compelling enough, what is your expectation of that trade? It should be a squeeze, right? Because if you're already extended, it doesn't mean you can't go higher. It just means it's going to tell you what the price action is going to be like if you do. Because if it's extended and it goes higher, what's happening? People are chasing, right? So why is this important to learn? You'll hear me kind of repeatedly talk about the expectation of a trade because that's how you formulate your sell rules, right? You need to make sure that your sell rules are aligned with the expectations of the trade so that you're capturing the right amount of EV in it is the best you can, but then also mentally so that you're operating within a defined and repeatable system. That's super important because it all comes back to mistakes in trading and how, because of the nature of trading, you can make one bad decision and it go against a lot of your profits. You can get back a lot of profits. That applies here because if you're just shooting, you can do the right thing most of the time or get away with a lot in trading, even with just good stock selection. But the reason you want to have something defined and repeatable is because of what we're talking about now, right? The one or two times or handful of times that make a mistake or have a bad day, it'll affect you much worse if you don't have a system that you can rely on. So just going back to this one, the way I would trade it, looking back on it, is you expect to squeeze. And so it's really simple. Your expectation is it should go immediately and not look back at all. So this first bar is your stop, right? You want to stop at the opening print low, and you're expecting it to go and not look back. That's the only real way I see to trade it. You could have waited for the first pullback here, and once it reacted, try to get long and scalp that out. You could have tried to scalp out this turn. Some other ways to get involved, but that was really good with the context of all-time highs. Now SNDK is just a little bit of a different trade. The volume is not as good. I would say MU definitely better stock selection overall. Um, but this is a kind of independent trade. And what I mean by that is MU is an all-time high breakout. It's a squeeze setup. SNDK is a magnet trade. They're both breakouts, but this one's below the all-time high, and you're using that all-time high context as a magnet for the target for the trade. All right, so with this one, my reasoning for entering the trade was once I saw us reject 1546. All right, that gave me a lot of confidence that if we got back through a second time, it's going to go. Right, it goes back to what we talked about on S&P at 7517. The more times you test a spot, the higher the odds begin to build that once it does break, that it will actually go. And again, there's no guarantees, but the more tests you get, the more the odds are increasing in your favor. So when I see this reject off the open, I'm like, okay, stay patient, stay patient. Then I see it turn again and get back up there. I'm like, okay, I'm in. Because buyers stepped in and the odds that we break through it are higher. And to that point, I got in on the second test. It actually rejected again and fell below it. So it was really the third attempt or the fourth attempt even that this actually took off, right? So just kind of validating that point there. Because of the price of the premiums, I just scalped it out. I was fine with this move because ATR was here and we did end up rejecting and kind of basing, but it did create a second move through. This to me felt a little random. I think it's because mostly of what MU was doing. Certainly a fine trade, but on a trade like this, I'd like to see the volume build, right? This is actually going inverse. So this is the trade I'm okay missing, fine missing that. MU is the play. a little bit cleaner. It would be hindsight to say that, oh, this was just a fantastic trade. Technically, yeah, it worked. I think on the back of MU, but from a repeatable system and defined playbook that we follow, this isn't amazing. It's not bad. It's just not amazing because you have diminishing volume. You rejected +1 ATR. You're below 1 ATR. So, the odds to me aren't great, even though it did work, right? Um, so that's SNDK. That's pretty much what I got for you. I posted the daily market recap, and we'll probably fine tune some things, guys. Give me your feedback, please. What I'm currently positioning myself to do is, post this to the whole group, and then the video, kind of the recaps, going a little bit more in depth, and only posting that within the accelerator. So it's more text for the room, and then more of my loose thoughts and reviews here on the video for you all. Outside of that, I don't have really many other thoughts. Maybe Fly is something to watch tomorrow at the news. After hours, they basically diluted the stock. So I'm going to look at that. Continue to watch memory. I would say crowd may be time for reversion. So ZS day one is tomorrow. Got a pretty big move lower here on ZS, and this is trending pre-market structure. It's setting up for a really nice front side short tomorrow or opening drive. The higher time frame. This has been a weaker one, so a negative catalyst is breaking this neckline of the inverse head and shoulders, or it's trying to. So this could be good to the downside. But what is also interesting is crowd. So there's been no check boxes for reversion yet, but we are close to them now. So what I would say is a concern. I would put this in a small category for now, but you have a couple things. You have a catalyst with the ZS, but it's a sympathy catalyst, so its weight is a little bit less. And then you have the prior day bar. The context here, the prior day bar checkbox, I do like because it trapped today. So you actually did get a failed breakdown of that prior bar, and previously it's not seen any tests, right? So the first time it finally attempted, it actually trapped it, which is good because, like we were just talking about, the more times something tests, the more the odds are increasing in your favor once it finally breaks, right? So we're getting close to that with this sympathy catalyst. So I would grade this like on a scale of reversion, probably somewhere around like 5 or 6 out of 10. It doesn't mean it can't work amazing. It doesn't mean it works at all. But these are, the ways to think about it. The check boxes that are close to being checked, the ones that are not, the slope is really steady. Oftentimes, what you want with a really good reversion trade is the slope to increase dramatically, and then put in a signal. So this is just really steady slope, and that means that it's very strong. It's just being accumulated. An example, really, lately, there's this example here. I would say the best example, though, is SMCI in 2024, which you've probably heard me reference before right here. So look at this slope, very, very steady, right? And then boom, you get this ramp. That is a big checkbox for reversion. And a simple way to think about it is if you're to stretch a rubber band and the rubber band gets stretched and stretched right before it snaps, that is exactly what's happening here. So there's some elasticity in the stock. Crowd doesn't have that. Crowd is strong and steady. Does that mean it can't revert? No. You don't have to have every checkbox for a reversion trade to work, but we build our framework for what reversion means around the best ones, right? And then you size accordingly on maybe some that have some boxes checked, but maybe not all of them, right? We operate within a game of odds. There's no perfect system or rule. Okay. Last thing I mentioned on crowd is that 9 EMA is a bit of distance away. So maybe this is at least just a check back to the 9 that we could get, which would be a fantastic day trade if we can get that. And then we'll see. Maybe then it ramps up, stretches, and then breaks. That might never happen at all. Example of that would be like CoreWeave. So this I was waiting for a big reversion trade, and it just never really set up for me. It broke trends. So this is a different way of reversion setting up, but you can see the slope maintaining pretty steady the whole way. So again, they don't all play out exactly the same. And they're all not great reversion trades, but the ones that do, they pay you a lot and you remember them, like SMCI and SCR, etc. So that was a quick down and dirty reversion class, I guess. But that's what we'll look at going into tomorrow, guys. Hope you have a great rest of your night. I'll see you in the room in the morning. Bye.